Amazon CEO Andy Jassy elaborated on the company's AI ambitions and the company's prospects in 2023 and beyond. So in this video, I'm going to review what the CEO said, what it could mean for the stock price. So let's begin. Starting with the CEO talking about providing customers more one day and same day deliveries, and they're on track to have their fastest prime delivery speeds ever in 2023. So, this is really good news in terms of attracting customers and keeping customers. Although, I think in this area, Amazon is facing one of the biggest threats it's ever faced, in that companies like Walmart and Target have done an excellent job. I will repeat, an excellent job in fighting back. How do they do that? Their same day services, the buy online and pick up in store, that's working so well for Amazon and I'm sorry, for Target and Walmart. It's working so well for them. Billions in billions of new customer orders are going towards those types of orders. Buy online and pick up in a Walmart parking lot or a Target parking lot where an employee will bring the item to your car. Doing that, you can get your item in as little as an hour or 2 hours. Versus if you buy online at Amazon, most likely you're going to be waiting roughly 2 days for your item. And so customers are choosing this and they're preferring that. And keep in mind, Target and Walmart, Target has roughly 2,000 locations, Walmart has way more locations around the world. They can use those brick and mortar stores as a competitive advantage, and they have been. And so now, after years of being the leader in convenience, Amazon is arguably facing a huge threat from Walmart and Target and others. It's not just, I just mentioned Walmart and Target because they're the biggest, but Home Depot is doing something similar. And so you can see it taking a greater hold on brick and mortar shoppers, and it's kind of putting it on an even playing field, where before it was Amazon was taking so much market share away from these brick and mortar retailers that there was a question if they would go out of business because of it. But now those brick and mortar stores are being used as an advantage. Amazon is trying to fight back by speeding up delivery, going to one day and then ultimately same day. If they can make progress on this front, then they can catch up. But it's going to be considerably more expensive for Amazon to compete on the same level because of the thousands of brick and mortar stores that these other retailers have versus Amazon, who does not have that. So they're going to rely on their delivery network to bring items into consumers' doorstep. The next thing the CEO talks about is advertising. And I will tell you, Amazon's doing an incredible job gaining market share in the ad industry. In the most recent quarter, they grew ad revenue by 20 something percent, where the industry overall only grew by actually decreased by 7%. So this is a result of their very substantial investment in machine learning, artificial intelligence, to make sure customers see relevant ads when they're looking for various items, and they've meant that advertising has performed unusually well for brands. That's the key. It's performed unusually well for brands. Because if brands realize a good return on investment, they're going to increase their spending, right? If you spend on Amazon for advertising and you see your sales jump, you're going to say, man, this worked really good. Let me do a little more. Let me do a little more. And you'll take away from your budgets from other areas where you're spending and bring it to Amazon. That's what Amazon has been doing, and they've been doing it really well, using their AI to determine which ads to show to which users, and it's been working really well. And the CEO saying we still have a lot of upside in advertising. So that's really good news for Amazon stock investors because this is a lucrative area with very high profit margins. Unlike its e-commerce business, which I just discussed earlier, how expensive it is to bring items into consumers' doorsteps, advertising is a lot less expensive for Amazon to implement and it's a lot more profitable. So this is a critical area that's very good news for investors that Amazon is doing very well in. The CEO goes on and says, our recent announcement on large language models and generative AI and the chips and managed services associated with them is another example of how we're capitalizing on AI. And in my opinion, few folks appreciate how much new cloud business will happen over the next several years from the pending deluge of machine learning that's coming. Really, really understated here, I think, what how much Amazon can benefit from artificial intelligence. What the CEO is talking about here is on the revenue side, right? When you're running these large language models like ChatGPT, they need computing power. Right now, ChatGPT is using Microsoft's cloud for its computing power. But that's just one AI. There's going to be others, and many of them are going to choose AWS for their cloud computing, and that's going to be a big boost for AWS in terms of generating revenue. And remember, AWS is the most profitable segment for Amazon, so that's a nice tailwind for Amazon in terms of capitalizing on artificial intelligence. That's just on the revenue side. Amazon has a lot more ways to capitalize on AI in terms of reducing costs. I've talked about this several times. One way is on customer service. Amazon spends a lot of money on its customer service reps, and they can transition that if they can build out a large language model that can answer consumers' questions more intelligently, where consumers will not require to speak to a customer sales rep. So there's a lot of room for Amazon to capitalize on AI, both on revenue and on costs. And I think this is going to be a big tailwind for Amazon. I, I think this is just the tip of the iceberg in how it's going to benefit Amazon and, for that matter, Amazon stock investors. All right, and the last thing I'll talk about is Amazon's progress on cutting costs. The CEO saying we made the very difficult decision to eliminate about 20,000, 27,000 corporate roles, and if you look at their total employee count, it was down by more than 27,000 quarter over quarter because not only did they eliminate corporate roles, but I assume they eliminated some warehousing roles, not necessarily by firing people, but more likely just attrition, right? People quit every day, people find other jobs every day, and Amazon can reduce their employee count just by not replacing these workers that quit, these workers that change jobs. I think they've got a lot more work to do in that area because they still have over 1.4 million employees, which is way more than they had before the pandemic. So they've really gotten bloated ever since the outbreak, and they've got to work to reduce that. And I would prefer them to reduce their employee count through attrition. Just let your headcount reduce by people quitting and people leaving and just not replacing them. And that way you don't have to spend the time trying to figure out which people to fire, which people to keep, and then giving out severance packages to the people that quit. It's a lot more costly to do it that way than just to let just to let attrition naturally reduce your headcount without rehiring them for those roles. Okay, so that's all I've got for this video, and I think the CEO gave us some really good insight into Amazon's prospects in 2023 and beyond in the short comments that he made on April 27th following the company's earnings release. So I hope that gave you some insights into what's going on at Amazon, what the CEO is thinking about over the next year or more, and it informs your decision on whether or not you're interested in investing in Amazon stock. But that's all I've got for this video. If you enjoyed it, subscribe for more content just like this. Thanks for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.